Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates, whether it might come from the economic calendar or headline news or geopolitical or combination of them. But also, it gets really confusing in the market when the market sentiment changes, and we got good news is not bad news, and vice versa. So, somebody who might be out there watching the rates and see good economic data and then rates going bad might be kind of scratching their heads and figure out what's going on here. So we try to get into providing these discussions out here and give you guys that information as to what's on investors' minds and why market is moving the way it is, and hopefully give you that information you might be looking for. A little bit about myself is I am a loan officer. I work with a national lender. We do lend in all 50 states. We'd love to earn your business if you guys are looking to refinance or purchase. But we can also be a resource for any of you guys out there. If you guys got questions about anything, we'd be more than happy to help you guys out. So without further ado, we'll jump right into it. We'll start off with the economic calendar. Today we got durable goods for the month of May. So the previous report, in April, it got revised slightly lower. Instead of growing 0.5%, it grew 0.4%. Forecast was very modest for the month of May at 0.1%, and it came in pretty much hotter at 0.7% for the month of May. So good news right there that we're seeing. We also got pending home sales for the month of May. So in April, it got revised slightly lower to 99 from 99.3 thousand to 99.2 thousand, and came in at 99.9. So that's a 0.7% increase of pending home sales. We were seeing a kind of a drop for about, I think they said 6 months. I think I read 6 months in a row. I know it seemed like for a while there, but lost track. But yeah, pending home sales had an improvement in the month of May. So we may see this have a slight uptick coming with the summer because it is summertime, and this is typically the times where we will see more home sales. But time will tell here. Now, the markets did have a little bit of a reaction to the 5-year notes here. We'll look at mortgage-backed securities. Um, so as you see here, we're down about 30 basis points, which will translate. We're pretty much at the lows of the day. We were up slightly higher, up around 15, 16 basis points, being down 15, 16 basis points. But as soon as that 5-year Treasury auction was finished, it came in pretty poorly, and as a result, this dropped back down towards the lows of the day. So we're down about 30 basis points, which translates almost a quarter, roughly a quarter point, and and these are about like zero point 0.3 basis points, which would be like basic zero point 0.3 in points, is what that would translate. And so yeah, rates probably you're probably looking at roughly about 1/8 of a percent in the rate, what that would kind of translate to. So a difference. So we worsened by about 1/8 of a percent here. So let's go ahead and here's you can tell here. So that auction was at 10 o'clock, right around here. And this is where we had the big drop here, right around this range here, drop down here. We kind of subsided a little bit, but we've been kind of more of a sideways pattern of late. We'll see if it holds. But since that whole CPI report came out, we tanked. Then we got a slight improvement for a little bit, and then this week I'll kind of touch what we got here on the economic calendar here. We do got a number of items here. We got some housing from with the Case-Shiller and FHFA home price indexes with consumer confidence for tomorrow. Wednesday we got the GDP for the final Q1 one. So and then this will be a big one. Obviously, the PCE, which is the Fed's favorite gauge for inflation. And of course, we got the Chicago PMI and we got jobless claims. And then the markets will be closing a little early on Friday due to Independence Day, 4th of July, which will be closed next Monday, being the 4th. And then that day we'll have the ISM, manufacturing, and then construction spending here. So the big one will be Thursday. That would be my kind of concern for this week because obviously after that CPI report came in, and even has a little bit more weight to it because it's the Fed's favorite gauge for inflation. If it comes in pretty hot, we could see another dismal return on both the stocks and bond market. So both markets reacted quite negatively for about a good week or so, and dropped quite a bit at that point during that period. And that was right around here when the CPI came out, where we just dropped dramatically way down here. So over the last week or so, we've been kind of steadily working our way back up towards the 25-day moving average, but the last couple of days haven't been as kind. So as you saw here, we saw some weakness here. We were way up, and then we kind of closed up downwards, even though we closed up higher than we were before. But the same thing were happening on Friday, and then today's kind of doing the same thing. We're kind of losing some of that ground again. All right, and yields. We're back up to just under 3.2 now, and this one's been climbing too. We had kind of a ceiling at about 3.17. It looks like it's kind of breaking above that, but right now there's like another ceiling right around the 3.2 range. So hopefully this will be keep a lid on it and keep it from going too high up. Otherwise, we could see back up to this level again, back in the 3s, 4s, 5s here, which is the last thing we want to do as rates rise much more considerably. All right, so lastly, let's take a look here at the 30-year fixed. This is the average rate for a conforming limit. It's got the points built in there at 5.25%. Oh, I'm sorry, that's 5.85%, and the 15-year was at 5.25%. So not a huge difference between the two now. We've come down a little bit, but these are the national averages for conforming loan limits there. All right, folks, if you guys have any questions, we're here for you guys if we can be of any assistance. If you guys like these videos, please help us out and smash that like button, share us. We greatly appreciate it. Give us this channel a little bit more help, and we certainly greatly appreciate you guys. You guys have a great rest of the day. Thanks so much for watching. Look forward to see you guys tomorrow. Bye-bye.